So, you want to learn how to paper trade on TradingView, the platform that every trader, investor, or shitcoin gambler knows and uses? Well, I guess the latter would be more familiar with Dex Screener, but that's besides the point. Maybe you've never traded before and you want to practice and get a feel for it without the risk of actual financial losses. Maybe you already trade, but you want to practice a specific strategy by paper trading it either in real time or by using the bar replay tool to backtest. Or maybe you just want to experience the enjoyment of clicking the long and short button at random and watching a demo account slowly evaporate. Or quickly evaporate. Either way, I think paper trading is a great tool with many various use cases, and that's why in this video I'll be exploring the paper trading function embedded into TradingView itself. Because in terms of convenience, I think it's the best option, or at least it's one less tab that you have to click through whenever you want to open a trade. And I will say, I'm not the most experienced paper trading demo account user. I was that stubborn guy that, when I was learning how to trade, instead of listening to some good advice, which was to, really spend time paper trading rather than actually putting money up for risk when I don't necessarily know what I'm doing, I chose to learn the hard way. And yeah, sure, there are definitely some things about trading that you cannot learn through paper trading. A lot of the psychological impacts that trading has on you and can have on your decisions aren't necessarily there with paper trading because you're trading with fake money. And I was that guy that instead of, really paper trading a lot and practicing my strategies on there, I would just trade with a small account, something that, still kind of gives that psychological aspect of trading because I know I'm trading with real money, even if it's not a lot. But what I call my practice trading account is significantly smaller than the amount of money I was sending to trading exchanges when I was first getting into trading and basically being irresponsible and gambling. Once I learned that I wanted to take this seriously, I significantly decreased my position sizes and significantly decreased my risk until I actually learned how to trade. That's the route I took. But there are more use cases than just, a new trader or someone who doesn't know what they're doing, just kind of paper trading to get a feel for what it's like to trade. I think it's a great tool to test new strategies that you may be implementing, learning, or even coming up with yourself. Especially when you use the bar replay tool to go back and backtest. That can, kind of speed up the process of testing new strategies. I think it can be very useful for many different reasons. So, with that being said, what is paper trading? TradingView actually answers that question for us. So, first off, in order to get to the paper trading function, I will log out so it appears how it will appear to you. Down in the bottom of TradingView, you see, Stock Screener, Pine Editor, Strategy Tester, and Trading Panel. Now, this is where you're going to want to go. You click on Trading Panel, and you scroll down, and this is where I guess you can connect different exchanges or brokerages to TradingView to actually trade on TradingView itself with real accounts. But that's not what we're doing here. Today, we are clicking on this paper trading option, and it says Brokerage Simulator by TradingView. So if I click on that, it will give us a brief description of what paper trading is. Paper trading, also known as simulated trading, lets you practice buying and selling securities. The process is similar to real trading, except no real money is used. So that's exactly what it is. It is practice trading with essentially a fake account. So if you click connect, you'll see that I basically have my fake paper trading account here with 100,000 fake buckaroos in here. And I believe this 100,000 is the default. This is what comes up every time I reset my account. So when you first make your account, it should look like this. You should have 100,000 fake dollars in here. You can make a name for your account. This is Dylan Wave's paper trading account. And this is essentially just a pop-up menu. You can, adjust the size of this here. If you click on this paper trading option, it minimizes it. If you click back on, it'll pull it back up. It will, pull up to whatever you leave it at last. So if you make it full screen, it will come back up as full screen. And before we get into the actual trade function, which is right here, let's talk about what is on this screen here. So obviously we got the account balance. You have this little drop-down menu for your account. I guess you can probably make multiple accounts if you want. Maybe you have one swing trade, one scalp trade, or you have different accounts for different strategies you're testing. You have that option, I think. Let me just double check though. Let me make another one. We'll call this one Waves Dylan. Yeah, we'll see if we can have multiple accounts here. And yeah, it looks like we can. So yep, you have that option as well. That's good to know. You have this little drop down menu next to it with some other options here, which I'm not going to go through all of those. You can explore those if you want. I'm not going to really point out everything here. I'm just going to point out the important stuff. And down here you can also log out of your paper trading account. So this is important because sometimes you don't want all this extra stuff on your screen. Like if I open a trade here, I'll just go ahead and mark it into a trade. Okay, little arrow shows up. I got my order placed. Now I want to close the trade. Boom, boom. All right, now these arrows are basically stuck on my chart. So even if I, minimize everything, minimize this, I still got these arrows on my chart. So if I want to get rid of this, and if I want to get rid of these buttons up here, which these also open up the order menu, then basically all you have to do is log out of your paper trading account. So you come down here to this drop-down menu, log out of paper trading. Now the trading panel option comes back up, and you're back to normal TradingView. So now let's go over some of the other things that are on that beginning screen. So we have positions down here. Again, if you open a trade, then this is where your position will be. Pretty similar to how an actual exchange will appear. You got your fill price, your quantity, you got your P&L right here. You have an option to edit your take profit or stop losses. And then the other things on the screen, you have your orders here. This shows previous orders, I guess, because these say filled. You can have working, so if you have limit orders or stop losses, it should probably show up here. You got your filled, inactive, all that. You got your history and your account history. So I think account history is just your positions. It'll give like a description of your position over here, closed long position, yada yada yada, closed long position over here. Whereas I think this is just order history, and you also have a trading journal option, which I guess just shows every function that you do, or something along those lines. I'm not exactly sure. Again, I haven't used this that much. How to reset an account, which if you want to have a specific amount, maybe you want to put $1,000 in an account, boom, now you have $1,000 in your paper trading account, so you can reset it at any point you want. So now let's get into this trade button up here. So next to paper trading on this panel, if you minimize it, it'll be down at the bottom of the page. If you hit this trade button, this panel will pop up on the right-hand side. And this is where you'll place your orders. You can also click these buttons up here, and it will also pull up that panel. You click the red one, it'll go to the short option. Click the blue one, it'll go to the long option. And let's start from the top down, and we'll go over everything. So up at the top, you have order. That's what this panel is. And you also have a DOM option. Not sure what that stands for, but this is pretty much bringing up what appears to be an order book. And you can click on some of these prices, and I guess that can help you place orders quicker. But I personally don't do that. Usually I mark it into trades anyway, but if I am going to limit, I usually just put a horizontal line on the price point that I want, double click it, go to coordinates. This is showing the price that it's at, 67613 right here. Copy that. I'm going to place a limit order, then I'll just put that in at the price. It's an option here if you want to use this order book, but I'm just going to focus on this screen right here. So going down from these two options, you have your sell and your buy option. So obviously, if you want to open a long order or a buy order, you'll use buy. If you want to short or sell, you'll use the sell option. And there is no hedge mode on this paper trading account, at least not that I've been able to equip. So that means that you can't have two positions open at once. So if I open a long right now for 1 Bitcoin, click market in right there, and then I go to the sell option, and let's say I do 0.5, this will not open a short for 0.5 Bitcoin. Rather, it will sell half of my already open position. So clicking sell after you already have a long or a buy open will just take out of the open position. So if I click sell, that decreases my position size. That's just a way to take profits. And if I go back to sell, now that I have a half a Bitcoin in my long and I sell 1 Bitcoin, what it's going to do is it's going to sell my remaining half a Bitcoin in my long and open a short for 0.5 Bitcoin. So if I do that, boom, there you go. And this is important because there is no real way to have limit partial take profits. If you set a take profit, at least from what I've been able to see, I haven't found a way to set limit partial profits. Basically, if you set a take profit, like let's say I want to close this trade out at this price point, I copy those coordinates into this box, and I use my take profit there. There's no way to set partial profits. It's just going to close my whole trade out there. So if you want to take partial profits out of the trade, you have to actually use this order book and actually manually take out whatever profits you want to take out. That's the best way that I've found to take profits. Just because I'm a partial profit taker, I usually don't just take one TP and that's that. I typically will have multiple take profits stacked, or I'll have multiple areas of interest to take profits at. If price gets up there and just blasts through that area, then I'm not going to take profits there. I'll look to the next significant spot. Now let's go over the different types of orders that you can use. You have market orders, which a market order will just put you in the trade as soon as you click the button. Now, something important to know is that market orders on paper trading are going to be different than market orders on an actual exchange. Because there's not going to be fees on paper trading and there's not going to be slippage, meaning I can open a trade for, well, I guess I can't open a trade for 100 Bitcoin right now because I only have $900 on my account, and I guess it lets you open with more than you actually have in your account, because I can open a $100 Bitcoin trade even though I only have 100K in my account. Meaning there's some kind of imaginary leverage being applied here, which is cool. There's no like actual leverage feature. It just lets you open whatever amount you want. And, I guess if you reach a certain point, you will either go into debt with your paper trading account, or maybe you get liquidated. I don't know. I haven't been liquidated yet. But it does let you open whatever size trade you want. There's no cap on that, regardless of what size account you have. And let me double check that by going back to the smaller account and trying to open a 100 Bitcoin trade. It lets me do it. But regardless, I got off topic. My point is, if you tried to market into a 100 Bitcoin trade on a real exchange, it would not act like this. It would not open at the exact price that you want it to. It would not open exactly where price is at, because there's such a thing as slippage. And basically what that means is if you market into a trade, you're trying to take out of the available liquidity that's already there. And basically what that means is if you market in a short for 100 Bitcoin, but there's not enough liquidity at that exact price point to fill it, your trade will probably get filled lower. And that means that you'll have a worse entry because you shorted lower than you wanted to. Now your, invalidation is, farther away from your entry than you wanted, meaning you're probably risking more than you wanted to. So slippage is something that you have to consider on real exchanges, but not with paper trading. It will just open wherever you want. And there's also no fees, I believe, with paper trading accounts. Obviously, when you're marking into trades on an actual exchange, you have to account for fees. So there are some differences, but there's a market order option, which, like I just showed you, lets you open at the exact price point whenever you click the button. The limit order feature, if you don't know what limit orders are, this allows you to place orders at specific price levels, and the order will not trigger unless price comes up to that level. Or if you're opening a buy limit order, it has come down to that level. Now, you can only place a limit sell order or a limit short above price, and you can only place a limit buy order or long order below price. And with real exchanges, limit orders, number one, they have less fees. Usually it's cheaper to get into them, and you typically will get filled at whatever price you set the order at. So if I, let's say, want to short Bitcoin, if it comes up to this price point, I will, again, copy the coordinates of that line that I just put on the chart, and I will go over to sell. And on the limit option, this is the price bar. So this is where I'll put the price that I want to open the trade. And down here, units, this is going to be your position size. And I'll get into margin, leverage, position size in a little bit. That's not what this video is going to be focused on, but I'll go over it quickly. But essentially, this is your position size. And when it says units, this is units of Bitcoin. So if I click 1, then I'm trying to open a trade for 1 Bitcoin. If I click that order, you'll see an order comes up on that line that I put down. So I have a limit order placed. It is not filled yet, and it will not be filled unless price comes up to tag this order. So again, that's the difference between limit orders and market orders. If I wanted to open a 1 Bitcoin short via market order, then I just type in 1 in units and I click the sell button and boom, I'm already in a trade. And I am going to actually go over some of these settings because I realize as I'm doing this, I'm making a mess with these arrows. So what happens if I want to get rid of these arrows? Well, if you go back down to this trading panel, you click on paper trading, click on this drop down menu and go to trade settings. You'll see that in the chart settings for TradingView, there is a trading section. So this is your paper trading settings. You have your buy sell buttons. I think these are these buttons in the top left. If I uncheck those, they disappear. So if you don't want those up there, you can do that. You can hide your positions if you want. You can hide your orders. And I think this check mark, executions, is going to be the arrows. If I uncheck that, that will get rid of the arrows. So I guess I am diving into these settings a little bit and learning them for myself. So that's good to know. If you don't want all those arrows on your screen, just uncheck that. Okay, so we went over market orders, went over limit orders. Now let's talk about this third option over here, which is stop. And this had me confused when I first saw it, but this is just a conditional order. And so a conditional order is something that I never use. I never use this, but there may be some good reasons for it. Let's say you wanted to enter a short if price breaks down below this low, which I guess is how a lot of people use this. And I know that oftentimes, a reason that a significant low gets swept is not only to hit the stop losses that were down below there from anybody that longed after the low was put in, but it's also to trigger some of these conditional orders, which is basically, like a limit order and a market order combined. So how I said that you couldn't place sell orders below price when it comes to limit orders? Well, if you wanted to say, well, I want to enter a short if Bitcoin comes down to this price point, then you can set a conditional order there. And I believe this acts as a market order. So essentially, the condition is that if price comes down to this price point, you will open a market order at that price. So let's test this out a little bit. Let's set a conditional order for right below this low, and maybe it gets hit. And if not, I might have to place a long above price, but we will go to sell. We will put this price in there. And you'll see that it's letting me open a short right now. So it's letting me set a sell order below price. If I do that same thing, so if I go to sell again, and I put that same price into the price box, 76336, that's where I placed this order already. And I go to buy, it's not going to let me place a long order down there. So it's kind of the opposite of limit orders. You have to put longs above price and shorts below price. And essentially, once price gets there, it will trigger a market order to open that trade. So let's try and set a long above price because it looks like price is pumping. We'll do that, and we'll set a conditional order to open a long if price comes up to 67450. And it looks like we may get filled here. Let's see. Any day now. It's all right. I can be patient. I can wait for this nothing burger of a trade to trigger. That's fine. I'll sit here and talk to myself. That's no issue. Come on, Bitcoin. You can do it. Up. There we go. All right, so, yep, now I'm in a long. So that is how conditional or stop orders work. Okay, so now that we went over all that, I also kind of went over how these work. Again, this is your position size in units of whatever asset you're trading. If I'm trading Ethereum, then this unit will be in Ethereum. So 1 unit will be 1 Ethereum. We know that with limit orders and with stop orders, you need to have the price that you want to place your order at. And with market orders, it will just trigger immediately. And below this, you have options to preset take profit or stop losses. I think stop losses are very important. I usually will just enter my trade and then I'll set my stop loss after. I usually don't have a stop loss so close to price that I have to have it preset before I even open the position. I usually will open the position and then place my stop loss after. But that doesn't mean I don't calculate my position ahead of time and calculate my stop loss. So now let's get into how I actually calculate trades and how I would use paper trading in a responsible way to plan out responsible trades, which very simply, I think a responsible trade has 4 things. It has an entry, it has an invalidation, aka your stop loss, which those 2 things, your entry and your stop loss are how I determine my position size. I will get into that later. And the third thing is your target or targets. Usually I have multiple targets. Usually I'll have like a target for TP1. I'll have a further target for the trade continues to run. I'll also watch price as it progresses up. And if I see signs of bearishness at a certain point, I may choose to take profits early, but I still base my trades around reasonable targets and making sure that I have good risk reward to reasonable targets. Meaning if I'm looking to long right here and targeting the top of this range, do I really want to risk $1 to make $1.62? That is basically what this number right here means. That's your risk reward. So if you're risking $1 and then you're looking to gain $1.60, or for every $1 that you risk, you're looking to gain $1.60. And I typically like to have better risk reward than that. I like to shoot for at least 3 to 1s. And obviously, this depends on what kind of trade it is. And then perhaps most importantly, the fourth thing that a trade needs to have is a reason for all of these things. You need to have a reason to want to enter right here, a reason for choosing this invalidation for this specific trade, and a reason for choosing your targets, which the reason part is something I'm going to leave out today. We don't need to get too advanced here. You know, everybody uses different strategies, etc., etc. Today, we're just focusing on actually opening in the position and, you know, using the paper trading function on here. So we'll forget the reasons for now, and we'll just plan out a trade right now. So let's say I want to take this long position, and, you know, at this point, price is pumping, and I'm losing my risk reward. So let's say, for whatever reason, we're targeting this high all the way up here. A 3.25 risk reward is pretty decent. Now let's talk about margin, leverage, and position size real quick, because I think this is something important to kind of go over quickly. So first, what is margin? What is leverage? What is position size? Well, your margin is how much money you personally are actually putting on a trade. If you are using leverage, which a lot of crypto exchanges offer, and, you know, I think there's a lot of good reasons to use leverage, specifically to leverage a small amount of money up to, you know, a reasonable amount of money to where you can actually risk the amount that you want to risk without having a lot of money on the exchange. And this is especially helpful to people that trade small time frames, right? If I have a stop loss that's only 0.4%, but I want to risk a decent amount on the stop loss, I'm probably going to need to use leverage to risk the correct amount, unless I have a bunch of money on the exchange, which I usually don't want to do because I don't necessarily trust the exchanges that I trade on. And I think that's a healthy mindset to have. You know, I try to keep as little money on exchanges as possible, while still being able to open the position sizes that I want. If you're using leverage, then you are basically multiplying your margin by your leverage to get your total position size. So in this case, this number right here is your position size. And again, it's in units of Bitcoin. So my position size is 1 Bitcoin. So that means if I were actually taking this trade on an exchange and I was using leverage, which again, I guess leverage is applied in a weird way here because you can open whatever size trade you want. If I were actually taking this trade on an exchange and I was opening a trade for 1 Bitcoin, which right now is worth approximately $67,000, and let's say I was using 10x leverage. So in that case, in order to get a position size of 1 Bitcoin, I would need to have a margin of $6,700, multiply that by 10 to get the total position size. And this is important to understand because different exchanges are different, right? Not every exchange is going to allow you to type in your position size when you open your trade, or maybe it will, but you have to change it in settings. Sometimes the box that you type in to open your position is going to be your margin, not your position size, which is important because if it is position size, which in this case it is, then leverage doesn't matter. At least not really, as long as you have leverage that's low enough to where your stop loss comes before your liquidation, then you're good. If you're typing in your position size, then your leverage does not matter in terms of how much you're risking. And I'll talk about that in a little bit. But if you are typing in your margin, if this box right here was margin, right? If my margin was 1 Bitcoin, and let's say I was actually using leverage here, let's say I was using 10x leverage, then I would not have a position size of 1 Bitcoin, rather I'd have a position size of 10 Bitcoin. So it's important to know whether you are typing in your position size or your margin to your exchange. In this case, this is your position size. And the reason I say leverage doesn't matter in this case is because if I'm opening a position worth 1 Bitcoin, it doesn't matter if I have 10x leverage and I'm using margin of $6,700, or if I have a margin of 100x and I'm using $670. It doesn't matter because I'm risking and gaining the same amount based on my position size. Based on my stop loss size, I can actually have 100x leverage because 100 times 0.4 is only 40%. So if my stop loss gets hit in this case, I would be losing 40% of my margin. Whereas if I was using 10x leverage, then this would be 0.4 times 10. And if my stop loss got hit, in this case, I would be losing 4% of my margin. Now, the difference between the 10x trade and the 100x trade is my margin, right? I'm losing 40% of $670 in the 100x case, and I'm losing 4% of $6,700 in the 10x case, which comes out to be the exact same amount of money, which I don't actually know what that is, but let's see, 6,700 times 0.04, I would be losing $268. And if I take 670, multiply it by 0.4, it's going to be the same, 268. So that is why I say that leverage doesn't matter if you are calculating based on position size. As long as, again, your stop loss comes before your liquidation point. If you're using 100x leverage and you have a stop loss of usually more than 0.8%, you risk getting liquidated because exchanges will cut your trade off early, right? If you're thinking about it logically, it should be a 1% move with 100x leverage is your liquidation because 1 times 100 is 100%. You lose 100% of your margin. But exchanges will cut it off early to prevent them from losing money, so they usually will cut it off at like a 0.8%. Like your liquidation will probably be coming in around this point if you're using 100x. So just a quick explanation, long-winded rant about leverage there. It is something important to understand if you are going to be trading. So I wanted to go over it quickly. So now let's say that I want to take this long trade and I want to be responsible and I want to stick to my risk management rules, which in general means that I'm risking 1% of my account balance per trade. This is my typical risk when I'm actually trading. I usually risk about 1%. Sometimes it's a little bit lower, sometimes it's a little bit higher. I usually don't go higher than 3% of my account balance in terms of risk per trade. And so now I'll talk about how I calculate my position size. This is a trick that I learned from a trader that goes by White Phoenix. He's in Jason Casper's VIP Discord. There are other calculations that you can use to find position sizes, but this is one that I use. This is the one that I like the best. So essentially the formula here is risk amount in USD divided by the size of your stop loss in USD, and I will clarify this in a second, equals your position size in the asset you are trading. And so very quickly, let's fill out this formula. So what is my risk amount in USD? Well, if I'm risking 1% of my account, if I go down to paper trading, well, this account is negative $9,000. So let's not use this one. Let's use the account that has some money in it. And here we have $100,990. So if we go to the calculator, we'll type in 100,990 multiplied by 0.01 to get 1% of it, which is $1,009.90. So this is how much I'm going to be risking per trade if I'm taking 1% risk. Again, sometimes it's a little less, sometimes it's a little more, depending on my confidence in the trade. But in this case, we'll go with a static 1%. So we'll copy that over and paste that into here. And we'll even add a dollar sign to show that it is in US dollars. Now we need to divide this by the size of my stop loss. So how do I figure that out? Well, if I click on my position tool that I just put up here, let's say I want to have a stop loss down below these lows. What I need to figure out here, and as price is pumping. I'm going to need to put my entry a little bit higher. We'll plan it for here. What I need to know is how much does Bitcoin have to move to get from my entry to my stop loss. We could see that my entry is roughly 67,543. My stop loss is 67,144. And this number down at the bottom left, this 387.1, is how much Bitcoin has to decrease in price to get to my stop loss. So this is the number, the size of stop loss in USD that I need for this equation. So I take 387.1 and I put that into the equation. So again, my risk amount, this is how much I want to risk, divided by 387.1. Let me make sure that's accurate. It is. And this is going to give me how many Bitcoin I need to put on this trade in order to risk that exact amount. It is 2.6. So I will copy this number right here, and I'll go over to my units, and that is what I'm going to paste into here. Not 12, I need 2. And again, this is only if you are typing in your position size into this box and if you are typing it in terms of BTC. Sometimes you type in your position size in terms of USD, meaning you would put in, whatever 2.6 BTC is worth. In this case, you just multiply 2.6 times the price of Bitcoin, which is 67526. And this is how much that position size is worth. It's worth $176,167. And what you'll see here, if I enable a stop loss here and I click this line and I put this as my stop loss in this price bar, then you will see that I am approximately risking that $1,000 that I wanted to. Right now, price is a little bit lower than my entry, so it's going to be a little bit less if price comes up to this line. It should be exactly, $1,009, like I calculated. And so that is the formula that I use to calculate my position size. Again, I'll write it out so you can see it here. So I need 387.1. That is what I am dividing my desired risk by. And that equals 2.6 BTC. So that's the formula I use. It's a quick and easy way to get your position size, how much I need to put on the trade if I want to enter a trade right now. Let's say I have to short right now with a stop loss above these highs. And let's say I'm risking $1,000 on the trade, roughly, we'll say 1,009 divided by 267.6. 267.6. 267.6. Okay, we'll do that. This is how much Bitcoin I need to put on the trade. I'll copy that number. I'll come over to units. I'll paste that in here. I will then have my stop loss preset, or I can set it afterwards. In this case, I'll just go ahead and short sell. There we go, and I will set my stop loss after the fact. So I copy that that number right there. That's where I want to put my stop loss. Now I go down to the paper trading panel, and I can manage my order from here. So this is my short that I just opened, 3.77 Bitcoin. That's how much I wanted to put on it. And if I go to this little edit button right here, I think that X closes the trade, so careful not to hit that accidentally, but you hit that little edit button, and it lets you put your stop losses in after the fact. So I can paste my stop loss into there. I'm risking $1,100, a little bit more than I wanted to. I'm risking more like 1.1% of my account now, but that's all good. And yeah, it actually says the percent that you're risking right down here too, so that's nifty. But yeah, roughly that was correct. I think it's just a little off because I was a little late to press the short button. And again, TPing is a little weird. If you want to set a take profit, you can, but it will close the entire trade out there. Like, let's say I want to close, let's minimize that so it's not my way. Let's say I want to close the whole trade out right here. I would copy that number, put that into my take profit price, paste that there, and this will show me how much money I'll make from the trade, $138. And yeah, again, there's no way to partial profit unless you do it manually. So I would go to buy because I want to close a short. And let's say I only want to close 1 Bitcoin out of the trade. Okay, I will buy 1 Bitcoin and that will decrease my position size. And I guess you can drag a TP to wherever you want and it'll show you how much you'll make. So you could do that as well. Again, that's setting a full order take profit. So it's going to close out the whole order. This video is getting long. I just wanted to go over the basic functions of paper trading. That's pretty much it. I can go into my account history and you can see all the trades that I just took. You may want to hide these little order buttons because they are annoying. So yeah, you can mess around with settings, but that's the basics of it. That's how you use paper trading on TradingView. And now that I'm done with it, I can go ahead and log out because I don't want all this nonsense on my screen when I'm trying to plan out my trades. So that is pretty much it for this video. Thank you all for watching. If you enjoyed, please consider leaving a like, subscribing to the channel, leaving a comment. All that helps to support the channel, and I appreciate it. And I will see you all in the next video.